In this video, I'm going to show you guys how to build a $50,000 a month recurring revenue stream in your land business. Let's go. What's up guys, my name is Sumner Healey from landinvestor.co. I help folks scale and grow land investing businesses. If you're new here, be sure to subscribe. Check out the Discord link down below to get into our land investing community for free. What I'm going to do here is actually go through a call I had quite literally today with a gentleman that was looking to join our LEA group coaching program. And really his goal was, Sumner, I want to get to 50K a month in recurring revenue in my land business, and I want to do it in a year. And so I broke down all the math on what you would actually need to accomplish this. Now, full stop, preface, doing this in a year is almost impossible. If we look at the fact that if you're starting at zero as a new land investor, you've got no pipeline, you've got no leads in your pipeline, you've got no deals in there, and you don't have the skills yet, highly unlikely. 99.999% of people will never do this. I built up a recurring revenue stream through owner financing, if you guys are unfamiliar, in my land business up to like 25K a month, and I did that in about a year. And I would say that's pretty miraculous. I don't think most people would do that, let alone get to 50K. Now, could you do this in 2 years? I think so. Really difficult, but certainly possible. Could you do this in 3 years? Yes, you absolutely could do this in 3 years. And I think that some people that are built different could do this in 2 years. So let's break down exactly what you need to get there. Now, if you guys are new here and you're like, Sumner, what are you talking about 50K a month recurring revenue? Well, in the land business, we've got two main exit strategies, right? Sell our properties for cash, buy it for 20K, sell for 40K. Classic bread and butter. Now, on the other side of the spectrum, a lot of what we do is selling our properties on owner financing terms. The thing about land is it's an illiquid asset, right? We're not always able to command, cash prices for our properties. And a lot of buyers out there want to do owner financing. They're going to put a down payment down. They're going to make monthly payments. And what we typically use in our business is what's called a contract for deed. What that allows us to do is we stay on title on the property until the property is paid off. And so if they stop paying us, we don't have to go through the foreclosure process. It keeps it very, very simple. And one of the cool things about this is you can sell your properties faster. You can sell your properties for more, and you get this recurring revenue stream in your business. Right now, we're at somewhere between 30, 32K a month in recurring revenue in our business from owner financing notes. And that makes up a very small fraction of what we do in our business because the vast majority of our revenue and profit comes from cash flips. But what this allows is a really clean and consistent cash flow in our business that allows us to take risks that other people might not be able to do, right? We know that next month we've got 30K coming in. The month after that, 30K is coming in. It never really deviates. And that's beautiful, right? Now, some people in the land business pitch this as passive income. They're full of it. This is not passive income. There's still work that goes into it, but recurring revenue in any business is really the most valuable revenue you can have, right? It allows you to forecast where your business is going to be. It allows you to take a risk that many other folks wouldn't be able to do. And I attribute a lot of my success in the land business to having essentially that security blanket, right? I always knew I could cover my team's salary, I could cover marketing, and I could take some leaps of faith that I would not be able to otherwise. Because if you look at a land business, most land businesses, the revenue looks like this. It's very lumpy. You have some months where you make 150K, some months where you might make 50K, 60K, 70K, especially when you're first starting out. If you don't have a really robust and comprehensive pipeline of leads and deals in your CRM, it's gonna be really tricky to have that consistency in your business. So a lot of newer land investors struggle from this. But also on the flip side, some people just want the lifestyle business of having recurring revenue, and that's what they're going after. There's a lot of merits to owner financing. The way I look at it is it's a tool in their tool belt. Some people are dogmatic and they just want to sell an owner financing. That's fine. The way I look at it though, it is something we always offer. It's a tool, and we don't always get to know when we're going to exercise a cash sale versus an owner financing sale. But that's enough rambling for me. Let's go and break down the numbers here. So a couple of assumptions of what we're going to go over. So when we look at owner financing, in a lot of cases, we're going to see more interest on lower end properties. Okay. Folks that are trying to go buy a $500,000, $1 million property usually can get cheaper bank financing, or they just have liquidity and they don't need it. So that's the first thing. It is going to slightly change the deals that you're going after. Now, do we still sell big deals on owner financing? For sure, but they make up a smaller chunk versus cash sales. And one of the things that changed the structure of our business from being really owner finance heavy to now being really cash heavy is just the type of properties that we're going after, right? If you're a land investor who's looking to start, grow, and scale a land investing business, I want to talk to you. At the link down below, you can click to book a call with my team and I. We're going to go through a strategy roadmap with you to build out your land investing business. Whether you're just getting started or you've been in the game and you're looking to get to the next level, come and talk to us. I want to speak with you. I'll see you on the call. That's really one of the only ways you can dictate if you get to sell for cash or you get to sell for owner financing is the markets you're playing in, the subtype of land you're going after, and the price points that you're going after. So in this example, we're gonna be breaking down deals that we're acquiring for $5,000, and for most of our deals that we're acquiring for $5,000 and selling on owner financing terms, we'll typically sell them for about $20K. That's pretty typical. Some will be crazy outliers that we sell for $30, some will be at $18. You can blend that together, it's about $20K, and that's pretty conservative, honestly. You could definitely juice up those returns. On deals like this, we're probably taking pretty low down payment, $500, $1,000. I'm of the belief that I would rather take a really low down payment to move the property quick, to have a higher monthly payment, and have a higher total note value. Some people don't see it the same way as I do. Some people want to really maximize that down payment, but at that point, you're almost playing it like a cash sale because it takes you so long to move it. Where really the value of owner financing is the total note value, the monthly payment that you're getting, and how quickly you can move that property. So if I was doing this, I would be going with an ultra low down payment, but I'm really aggressive like that. So most people are gonna be about $500 to $1,000 for the down payment, selling it for about $20,000, and you should see somewhere around $250 to $400 a month for the actual monthly payment that you're gonna be getting. In this case, we're gonna call it $300. We'll just kind of meet in the middle, call it $300. You'll have some ancillary fees that you can stack onto that, like a note servicing fee and a couple other things that you can throw on top of that. So you might be able to get an extra $20, $30 a month from that borrower, but we're just gonna keep it really even here and say, all right, $300 a month. So if we wanna have 50 grand in recurring revenue, we got $300 per property, we need 166 properties in our note portfolio. So we gotta acquire that many properties, we gotta sell that many properties. Now let's figure out, okay, cool, 300 properties, how much is that gonna cost us in terms of an acquisition price point? Now to get this done, we're gonna need about $833,000 in acquisition funds to go and acquire these properties. Now I'm gonna talk about something in the end in terms of how you can do this with way less money, so stick around for that part. But it's a lot of money. You're gonna need a crap ton of cash. And that's also one of the reasons it's highly unlikely, beyond just the point of having little to no skill when you're first starting. Most people are also not starting with that much liquidity. Highly, highly unlikely. But again, in this case, we're gonna assume you have that much capital. Now here's the cool thing, and this is really the metric that I look at. Now, if we sell these 166 properties at $20,000 for the total finance value, we will have created $3.3 million in total note value. That's really powerful, and you're gonna find out why that's powerful at the end. So 3.3 million, right? We take 800 grand, we turn that to 3.3 million in total note value. Now that's not profit. Our gross profit on that is about 2.4 million. It's just a little under 2.5 million actually. So that's just our gross profit, right? That doesn't include the marketing expense, the cost of data, cost to run our team, none of that. That's just what we bought it for, what we sold it for. So we created $2.4 million in gross profit, and you're gonna have really, really high operating margins and something like this. That's where it gets really interesting, and that's really the number that I look at every single day. Like, people are so hung up on, I want 20 grand a month of recurring revenue or whatever the number is, and that's cool for your lifestyle, but if we're talking about dollars and cents, I don't care about how much I'm collecting monthly. I'm more concerned about what's the total note value, right? We've got notes in our portfolio that are worth 6 figures, and we only get $800 a month, $1,000 a month. I'm cool with that. I'm more concerned with, can I maximize that total note value? Because at the end of the day, if I have to wait 7 years or 8 years or 9 years, I don't really care. I'm more focused on how much value am I capturing in total. And so I think a lot of people get so hung up on more notes in the portfolio to juice up their monthly recurring revenue, when the metric that we really want to look at is the total finance value and how much of that is actually gross profit to ourselves. Now, here's where things get really interesting. How much marketing are we going to need to send to get these deals? So a couple of assumptions. One, we're going to be using direct mail in this situation, okay? You're probably using either a blind offer or a range offer. For these lower end properties, a blind offer works just fine. For properties in this price point, if you're okay at this business, I think you could be getting deals around 1,500, 1,600 letters per deal. If you're really, really efficient and you're great at having your acquisition process built out, you might be able to get that a little bit lower. You know, in our business, we're at about 1,400 letters per deal that we do, but every deal that we do has about a 13K gross profit. All right, well, my worst nightmare just happened. My SD card ran out of storage right when I was getting to the good stuff. So in our business, we have about a $13,000 gross profit spread for the deals that we do. Now, the reason that we're able to get such a high yield from our direct mail, so we've got a really comprehensive acquisition process. And that's really what it comes down to, right? Most land investors are gonna just take the easy lay down deals in their business. And what's crazy is you can still run a profitable land investing business even doing that. But if you really want to get the most from your deals and the marketing that you're spending, you need to have a comprehensive acquisition process. Let me get you set down here. All right. So 249,000 letters is how many pieces of direct mail you're gonna need to send out, and that's gonna cost you about 142 grand to get that done. Now, one of the little secrets that we have inside the Leah community is that we've gone and brokered discounts with all the tools in this business. Now, there was only one Follow-Up Boss, our CRM, that would not give us discounted pricing, but with the discounted rates, and you don't even have to be in the program to get access to that. You can literally just go into our Discord and get access to all the free tools, or free, discounted rather. Now, when we're going through the numbers here about direct mail and data, we're gonna be using the discounted rate. So for the members inside our community, it's about 52 cents for a 2-page piece of direct mail, about 5 cents for a piece of data. Now you can get those prices lower, but we're gonna be talking about averages here for most members inside the program. So you're looking at about 57 cents for a 2-page piece of direct mail with that data. Now some of you might be saying, good Lord, $142,000 in direct mail marketing costs, that's insane. How would I possibly be able to send that much out? And you're right, it's a lot, right? If we're looking at sending that out in your first year, or even just in any given year, that's a lot of direct mail. That's why it's really important that when we're looking at goals like this, we need to zoom out and extend our time horizon to say, you know what, I'm not trying to do this in a year. I want to do this over the next few years. And when I look at really what makes successful business owners and entrepreneurs and land investors, is it's the folks that have the longest time horizon, right? Alex Hormozi talks about how he can tell how wealthy someone is by the years that they talk in, right? People that are on the lower socioeconomic scale talk about right now or tomorrow or this year. And if you can stretch your time horizon, you're going to have substantially better results because you're going to be patient for the process, right? If you try to pull this off in a year, you'd probably break a bunch of stuff in your business, it would go sideways, and you'd be defeated when you didn't get to that outcome. So I think it's really important that we extend this out. Now, that many pieces of direct mail over 2 years, totally doable. That many pieces of direct mail over 3 years, you should probably send some more direct mail, right? And so I think when we're looking at a goal like this, it's not about, can I do this in 12 months? It's about, can I do this in general? And I'm okay at whatever speed this happens. Now, I teased this at the beginning about how you can do this on a budget, right? Most people are not gonna have factoring in marketing and acquisition price almost $1 million to throw for building an owner finance portfolio. So this is how I would do it, and this is how I am doing it. Hey guys, quick interruption on this video. I wanted to let you guys know about our Leah group coaching program. So inside the Leah community, we've got 2 flagship offers. Our first and foremost, most popular is the Leah group coaching program. And we've got the Leah program, which is a standalone course. If you guys are interested in either and you want to go through a strategy call, a land investing strategy call, it's not a sales call, it's not a pitch fest. We will build you out a land investing roadmap and then figure out whether the Leah program or the Leah group coaching program can be of service to you. Inside those programs, you get access to deal funding, all the discounted tools and resources. You get to work with me, all of the Leah coaches. You get to be inside the private Leah community. It's bad to the bone. We've got guys and girls doing 300, 400, 500K in their first year net. We got some folks that are going to hit 7-figure land investing business this year, 2 years in of working with us. It's incredible what we are doing. So if you guys like this content, just imagine how good the paid content is. You guys can book a free call with my team and I at the link down below. We've got spots available this week, and I look forward to talking to you. Is once you start building up that note portfolio, right? You've got 200 grand in notes, 300 grand in notes. You go and you raise private money. Now you might be saying, Sumner, I don't know anyone that wants to give me money. Oh my God. It's okay. You have a skill set and you have collateral. What you do is you take that owner finance portfolio, what you have at that given time, say it's 200 grand, you go and find someone that is in your network or someone out of your network and say, hey, I'm running this land investing business. This is what I'm doing here. I've got this collateral of 200 grand. So if you loan me, via debt, via a promissory note, if you can lend to me $200,000, I'll have it secured against these owner finance portfolio, these deals that I have. And so God forbid I can't pay you back or something happens, you can take that as collateral, right? And now the outcome here that we're shooting for is not that you default on the debt, but it's that you can go and use that as your resume. You can go and use that as a way to make potential investors or partners feel substantially more comfortable with the operation, right? And so you can go raise 200 grand, let's say at 8 points, 10 points, 12 points in terms of interest, and go and deploy that capital in your business. And you just keep on doing that over and over again. And as your owner finance portfolio balloons and gets bigger, you can take more debt against it. Now, you got to be careful. You got to know what you're doing. And I am not someone that you want to talk to about, raising private money. Like, go speak to a lawyer. I'm not going to give you the ins and outs on how to do that. I'm telling you what I'm doing in my business, and it's very, very achievable. And once you have that owner finance portfolio, you can get lending against it to compound your results. Now, this, in my opinion, is one of the only ways to do this, right? Either you got to come into this game with a crap ton of money, which most people aren't, or you got to just reinvest every dollar that you make from your owner finance portfolio monthly. That's going to take a long long time, or you can go and get debt and get it loaned against your owner finance portfolio. So if I was starting from ground zero, I would stretch my time horizon. I would follow the exact template that I just went through, right? You gotta reverse engineer the outcomes that you're shooting for. And as that owner finance portfolio grows, I would get lending against it to compound my results. Now, you're probably not gonna do this in a year, but could you do this in 2 years? Could you do this in 3 years? Absolutely. And this is quite literally what I'm doing in my land business. We sell a bunch of properties for cash. We take that cash, we redeploy it for owner financing deals. We keep on building our owner finance portfolio. And really, this is my path to getting to $10 million in the next 5 years, 50 million in the next 20 years. This is the roadmap to me. This is the most scalable path to go about this. And as our business grows, and as our owner finance portfolio grows, we can start getting lending against it. So figure this was a cool video. If you guys want to do this, you're like, dude, this is exciting. This I like. I want to do the same thing. Pop into our free Discord down below. Come hang out in the Leah community. There's all sorts of cool stuff going on. We have nearly 300 active land investors in there, chit-chatting all day long. And if that resonates with you, you can even book a free call with my team and I to see if the Leah Group Coaching Program is a good fit for you, and you can start on your path to hitting 50K a month recurring. Hope this video was motivational, inspirational, educational, hopefully, I don't know, one of those three. Anyways, guys, I'll see you later.